Hey, everybody, it's Morris Wyatt, and I'm here with the More We Know We Grow podcast. Today, I have a special guest, a friend of mine, Torrey Gray, with Guaranteed Rate Mortgage. He's a professional mortgage lender and specializes in VA loans. So, today, I wanted to get more information about VA loans to share, with my followers and with my audience. And so let's go ahead and introduce them. Don't forget to share this podcast with anyone that may be interested in getting financed or have more questions about any type of loan types or VA loan types. Don't forget to follow me on YouTube at Morris Wyatt Atlanta Real Estate. And of course, all over social media, morriswyatt.realestate. So let's go ahead and get this going. What's up, Torrey?
Hey, Morris, how you doing, man?
Hey, I'm doing good, man. Thank you for joining us today.
Thanks for having me.
Yeah, I'm excited to have you, man. Like I said, you all, Torrey Gray, a friend of mine, works for a Guaranteed Rate Mortgage, and he specializes in VA loans. So I wanted to bring him on because I know we have some maybe active military or some veterans that may not really know everything that they need to know about the VA loan process. And so I wanted to bring him on just to kind of share some information with us and to help us grow. So, Torrey, just let us know a little bit about yourself and, how long you've been in business.
All right. Well, thanks again for having me. I've been in the business now going on 7 years. Prior to that, I did 26 years in the Army. I've been stationed all over the world, both Iraq, Afghanistan, Kuwait, as far as deployments. And now out here in the real estate mortgage business, just trying to do what I can to stay connected to my soldiers. My passion I found was leading soldiers. That's why I stayed so long. I just love leading soldiers and helping people to achieve their goals and get the most out of themselves. So this is a way for me to continue to stay connected and to give back to a community that gave so much to me.
Okay. All right, cool. So you were active military at one time.
Absolutely.
You for your service. Thank you
most
for
of my
service.
life.
That's good, man. Thank you for your service. I appreciate it.
Thank you.
So, what kind of made you get into wanting to, get in the mortgage business? And I heard you say, you wanted to stay connected with your veterans. But what kind of sparked that said, this is a way I want to get connected?
Well, it's funny because I was actually buying my first house. And when I met with my loan officer, we had a good conversation. We connected, and I was impressed with how well he did for me. And so I asked him a few questions, and before you know it, I started working with him as an assistant, and I was still on active duty at the time. And I started to get the challenge of growing a business, bit me first. So I just to be in it and start something of my own. Stayed in the military a few more years after that, and then I bought another home here in Georgia, and I told him about my previous experience, and then when I retired, offered me a position. It was a veteran-focused organization, so I just I kind of like slid right into that and down in Fort Stewart, Georgia, and I was able to stay connected. And then when I saw the impact that I was having on these young soldiers, I remember when I was in the military. The Army does an outstanding job of training us to be ready for deployment and to accomplish our mission. But, we don't do a great job of sharing information about benefits. So when I was on the inside, I realized how much information that I didn't have prior to becoming a mortgage consultant. And so now that I have the information, I'm just excited about making sure that other soldiers are very aware of what their benefit can do for them, because I know through experience how just home ownership can change your life, just on a financial aspect. So.
Yeah, it definitely is life-changing, definitely something that I promote. I always tell a lot of people that I speak with, owning a home may not necessarily be for everybody, but it is, something that is very beneficial. It can be very beneficial, and with today's rental prices, man, you might as well purchase versus
right.
renting.
It only makes sense now.
It only makes sense now, man. But so about the application process. So some people out here don't know how to get started, or kind of want to know, like, what will the application look like? Like, what would I need? So I guess help us understand, like, what does that application process looks like in terms of how would they get to the application, and then what type of information is on that application so they can be prepared.
Okay, so what I will say is, just in the almost 7 years that I've been doing this, I've seen the application itself change.
Okay.
Just kind of keeping pace with where we are now today. Now everything is so digital. When I first started, I actually had to have clients come to my office, sit down at my computer, and take the application. Now, what you have scrolling at the bottom of the screen there is my website. So we do, initially I like to either text it out or email out my website to anyone who's interested. Once they fill the application out, it's going to instantly give them their credit scores from all three bureaus at the same time that we get it. So part of that process of the application is to see how much you can qualify for if you can qualify. So when we get an application, you're going to have a copy of your credit report. You're going to provide your employment information. So it's important that you have at least 2 years of employment history. And unless you are an active duty soldier, then there are different qualifications for you. Then we also going to look at your credit report to see what your debt to income ratio is. So most people will have an idea, well, hey, this is what my bills are. But then when you get your actual credit report, you may see some other little miscellaneous things, and that we have to count as well. And then we also have to include in that debt to income ratio what the mortgage of the property that you're looking to purchase would be, an estimate. So once we have that estimate and we put that number in there, we get your total debt to income ratio along with your credit and your employment history, and we determine whether or not you can be approved and how much you can be approved for.
Okay. All right. Well, that's good. Good to know. So I heard you say credit score, and I know a lot of people are nervous about that credit score. They kind of scared to press the button to figure out what it is. But kind of give everyone kind of some information on where you think they need to be credit-wise to be comfortable and safe throughout the process.
Okay. And I like the way you phrased that question, because what's acceptable or what they can be approved is not exactly where I would recommend that they be in this particular market that we're in now, and I'll explain why. If you're applying for, let's say, an FHA loan, we can actually qualify you with a credit score of 580 or higher. For VA, you can also do it at 580 or higher, but typically 600 is a sweet spot. The reason why I say where I recommend that they be is because now that the interest rates are rising in today's market, along with home prices. You want to, if you want to have your score, if possible, you want to be somewhere around the 680 mark, because then you have more favorable rates. You can qualify, but what happens if you qualify with a score with 580 or 600, then you are assured your interest rate is going to be a little higher than what the normal rate would be. And the normal rate right now itself is kind of high. And what that can do is it can affect your debt to income ratio. So now a house you could afford normally under normal conditions with rates, you may not be able to afford now because the interest rate makes that payment too high to fit in your debt to income ratio. So preferably 680, but if you're anywhere in the ballpark of 600, 580, let's take a look at it and see what we can do, because there are some creative things we can do within your actual individual file at times, and depending on how much cash you may have, that you can maybe take care of some debt and things of that nature. But I recommend it for favorable rates that you be above 680, but to qualify, you can be qualified with as low as 580.
Okay, yeah, because I actually spoke with someone today, and they were close to that 580, but I kind of recommended that let's look at their file, see what we may be able to do to to increase that credit score, because we don't want to be halfway into a transaction, something hits the credit and knocks it down 10 points, and now you can't even get qualified. We lose out on everything. So it's good to I say speak with like your real estate agent or your mortgage lender. Try to come up with a strategy in the event you're not at that 640 or 680, like what you said,
Mm-hmm.
try to figure out what can we do to get you up as high as possible, just for your protection.
Right.
We could go in at 580, but then anything can happen, so we don't want that. So that was another question that I had. Like, what if the credit score is not where it needs to be? What are some options for people? Like would you kind of advise them on
Absolutely.
strategies? And I know, like with me, when they come to me, I have partners that I help with credit restoration and everything.
Absolutely.
Well, what about from your standpoint?
So every person that does an application with me, I'm not just going to say, no, you don't qualify, and they call me when you do. So as soon as I get the application, if it looks like we're going to have a credit issue, I go through the credit report, because some things I can advise them on at my level, but I am in no way a credit specialist. I'm a loan officer, but I've seen enough and I've done it enough to be able to say, hey, if you go in here and you do these few things, maybe your score will increase. And then we actually have a system, an automated system that's a credit predictor. So we can actually, once I have that credit report, I can actually go into my system, and it comes directly from their credit report and tells me, hey, if they pay this amount on this account, what would their score be? Tell me this is what the score will be for each credit agency. So I really prefer people. A lot of people will say they want to, before they apply for a house, they want to go and take care of their credit. My recommendation is go ahead and let me see it first, because what happens is if you let me look at it and say, hey, this is what my recommendation is based off what the credit system that I have it tells me, it can save you a lot of money, because you may wind up trying to pay everything off. And now when it comes time to buy your house, you don't have the funds you may need to buy your house. So if you let me take a look at it first, I can say, just take care of account A, pay this much on account B, and then we'll be good to go. And if it's something that's beyond my scope, that's when I also have a referral partner that I work with that is a credit specialist, and I'll just refer them to him, and he'll take care to get them back to me.
Yeah. And just for the audience to know, like he mentioned, let's run it through the lender first, because some things have priority over others. Some things weigh differently. And so you may think paying this bill off or something like that may help you, but it may be something else that you might be able to just pay down and it has the same impact.
Right.
Versus having to totally pay off. So I say get some professional advice before you just start spending all of your money on trying to just pay everything off, because there may be other solutions for that.
Absolutely.
So now I know the next thing is that pre-approval, man. I know a lot of people, when they get pre-approved, they're so excited. They call me, Mars, I'm pre-approved. I'm ready to go. Let's do it. And I have to stop them. And I have to say, all right, you're pre-approved. Have you submitted all of your documents so we can run you through underwriting? Because underwriting is going to be the one that actually cashed the check. And so we need to make sure they are happy with their file. And so tell us a little bit about how that works. For one, I want to know kind of like what are the do's and don'ts when they get pre-approved, but what's the importance of the pre-approval versus the approved?
Right. So there's different levels. One would be a pre-qualification. A pre-qualification just means that you submit your application, your credit score is qualified, the debt to income ratio according to what you entered into the application met the debt to income standards, and you have enough assets based on what you put in the application. Now it becomes a pre-approval once you actually turn in your documentation, your bank statements, your pay stubs, your tax returns, and then we verify your employment. Then we know then we can say it's a pre-approval. Now the better level of that would be to actually take those same documents and submit your file to the underwriter, which typically takes 24 to 48 hours, and have the underwriter to actually look through your file, his or herself. And once they tell us, hey, this file is now conditionally approved, now all we need now is a house. So there's different levels. There's a pre-qualification, your pre-approval, and your conditional approval by the underwriter. And that the conditions, she gonna say, hey, once we find out what the purchase price of the property is, and we do X, Y, and Z, the loan will be final approved. So that's what you want. So when you're shopping for your home, you can actually compete with some of these cash offers. In this market, a pre-qualification is not going to really get it, because what usually happens is, especially in the last several months, is that when someone is pre-approved, the listing agent will call me and say, hey, I just received a pre-approval from this guy. How strong is it? And if it's just a pre-qualification, I don't have your documents yet, I'm not going to put my name out there and say, hey, I stand on this file without actually saying the proof, right? But if I actually have your documents and I can tell the listeners, hey, I've already seen his documents, everything looks good, no issues. But what's even better if I can tell the listeners is, hey, I've had their documents, I've submitted them to underwriting, they've been underwritten already, and this file is solid. All we need now is a contract, and that's where we want to be at. The second part of your question as to what not to do. So once you are pre-approved or conditionally approved, my recommendation is not to move large amounts of money around. Anything over $500 in your bank account, just leave it there. If you have another way of dealing, of course, pay your normal bills on time, but don't just move large amounts of money from one account to the next. Definitely don't quit your job or change your employment status. Some people may start the process and be full-time and then go to part-time or reduce the hours, because we're going to get real-time information on your employment status at the beginning and end of the process. Of course, don't open up any new credit accounts, because when we do that pre-approval or conditional approval, it's based off the information that we had on that day. So if you change the credit file any, then we get a surprise at the end of the deal, and hey, we may be over our debt to income ratio, or your credit score may actually drop. So I recommend not to open any new credit accounts. And the basic rule of thumb is, if you have to think about it, just give me a call. Let me tell you, hey, yeah, you can go and do that thing. You'll be okay. Because at certain stages, it's a little better than others. But my recommendation is to not do it at all until we actually close.
Yeah, I had a situation a long time ago. This was when I first got started, before I used to advise my clients now. But we got all the way up to closing, and she was so excited. She went to buy some furniture. She was so excited, man. Bought some furniture. It messed up her file. Luckily, we were still able to save it. She was able to justify some cash to go ahead and pay off the card, and we saved it. But man, that was scary. I was like, oh my God, no, you didn't just go out. She was so excited though, man. And I like to advise my audience, like he said, keep the file the same. The same way they approved you, that's how it needs to look all the way up to the end, because they're gonna check your credit score again before you close.
Absolutely.
Look through and ask you for, your recent pay stub and any other thing that they may just ask for. You don't want any surprises. So keep that file the same for sure.
I've had that exact same scenario. No exaggeration, my second closing ever. Yeah. And the young lady, she was a soldier, went out and got excited, went to rooms to go, picked all the stuff out, had a delivery date. But they don't know is we get notifications when these things happen. Yeah. And fortunately, we were able to talk to the company, and they kind of, reversed everything, because it was going to kill us. The debt to income ratio was just too high.
Yeah, yeah, man. So, I heard you talking about FHA loans and earlier today, but let everybody know what type of different loans. I know you specialize in VA loans because you passed vet, and but you also offer other loan types like your FHA conventional. Anything else you offer?
Absolutely. So when I get a new buyer, my first question to them is, are they a veteran or spouse of a veteran? And the reason I ask that question, so I know what information to give them. I do a lot of VA loans because I'm a veteran, but I do all loan types that are out there. So if they tell me no, I'm not a veteran, then I say, have you owned a home before? And the reason I'm asking that question is because we have different products for people who are first-time home buyers versus people who are not. So if they've never bought a home before, now my first step for them is going to be, let's look at a conventional loan that has 3% down payment for a first-time home buyer, as opposed to a 5% down payment. So it saves them some money. But the benefit of that is they have a lower down payment. If they so desire, they can choose to put down as much as they want, but the minimum down payment is going to be 3%. But they can still take advantage of the benefit of the primary mortgage insurance going away once they pay off 20% of the loan. So that's my preferred method for new home buyers. Now, if we get into the process and we realize that, hey, your debt to income ratio is a little bit higher, or then I'm gonna say, okay, well, now we may need to change that to FHA, because the debt to income ratio is a lot more forgiving for FHA than it would be for a conventional loan. However, that primary mortgage insurance is going to stay for the life of the loan. My advice to them then is, when you have an opportunity to, let's watch the rates over the next year, and if the rates go down, then I'll give you a call, or you give me a call, and we get you refinanced to that conventional loan if need be. Of course, there's not a lot of options in the Atlanta area for what's called a USDA loan. USDA also has no down payment, and it has some income limits, but it has no down payment. It's a great product, especially for single parent homes. I think it's because the income is usually not as high. You don't have two incomes to worry about. You have your normal conventional loan, which is normal 5% down as a minimum, and of course, you do loans for investors that pay at least 20% down. We actually have a couple other banks that we partner with. If you need to build a home from scratch, then we have a partner. We have partners we deal with who do the construction portion of the loan, and then turn it over to us for the long-term financing. I would say the only loan that we personally don't have is the bank statement loan. So if there's anything else out there, whether it be down payment assistance, first-time home buyers, veterans, all those things I have access to. The only thing that I don't have access to is the bank statement loan.
Okay. All right. And so how will someone reach you? Like what does that look like if they're interested right now and they want to talk more or get the application process started? What does that process look like, and how can they reach you?
My phone number is everywhere. I remember when I first started, I was like, I can't put my phone number online, but now it's out there. So I love a phone call, and of course if we can meet, whether it be Zoom or Skype, whatever case may be, that's cool. But my phone number is area code 443-310-6669. And on my email address is torrey.gray@rate.com. So either way, if you email me, text me, call me, we get the ball rolling for you. And I love to meet in person. I'm not sure, I'm licensed in Georgia and South Carolina, and I'm in the middle right now of completing my Maryland and Florida licenses. So sometimes it's not feasible for me to meet you in person, but I can make it as personable as possible, whether if you want to talk like we're doing now, or on the phone, or via Zoom.
Okay. Are you on social media? Any social media?
Yes. Thanks for reminding me. So yeah, I am on Instagram. It is Torrey.homeloans. Is my Instagram name, and Facebook. I'm on Facebook as well. It's just Torrey Gray. So
okay. All right. Now, I always, the name of my podcast is The More We Know, We Grow. So I always like to help my entrepreneurs, right? So kind of any advice that you have if someone is looking to be a loan officer or getting into that field, like what would you say you experienced, or what advice would you give for them to get started?
Great question. It's a funny time now, but if it's in you, it's in you. I say, I hope this don't offend anybody, but you eat what you kill, right? What I mean by that, if you just have the hustle and the self-motivation about yourself and are willing to learn, this is a great field for you. Of course, you have to be comfortable talking to people, and be comfortable being told no, because you're going to get told no sometime, right? That's the foundation for me. I mean, just to be able to establish relationships. I'm in the relationship business, is how I like to look at it. Because hopefully when you do business with people, you do so over a long span of time if you do your job correctly, and you want to maintain those relationships. As far as technically speaking with the job, to me the hardest part is just getting licensed to become a loan officer. There's a state exam you have to take. It's very similar to the real estate exam. There are classes online that you can take to prepare for the test. It definitely is a challenging test, but it's doable. Once that's done, that test is going to tell you most about the laws and do's and don'ts of the business. I thought it was going to be a bunch of math, but it was very little math on there. It was some, but not a lot. But so once you get that out the way, it's just really about going out there and establishing relationships. You're not going to make money sitting in the office. You're not going to make money sitting at home. But if you get out the house or nowadays be creative about connecting with folks, whether it be the greatest platform we have now, social media, or just going out and shaking hands, hosting events, going to events, being seen. Then once you build a good, strong network, I believe it's a very lucrative business. I do well, but I know people that's in the business that do extremely well. Like definitely, I worked in an office full of millionaires in my last job. I was the only one that wasn't a millionaire. I was trying to get there, but they've been in business for a while. But it's definitely a great field if you have the right drive and self-motivation to be in the business.
Okay. All right. Well, we really appreciate it, man. Thank you again for the time. Thank you again for the wealth of information and knowledge. I'm sure a lot of people got a lot of good information about the lending process and what they need, and just going through that process. So thank you again for taking the time out. Hey, you all, don't forget to follow me on YouTube at Morris Wyatt Atlanta Real Estate. my social media, Morris Wyatt _real estate. And you can just find me like on Facebook at Morris Wyatt. But thank you again, Torrey. And I look forward to doing some more deals with you, buddy.
All right, no problem. Thank you. Talk to you soon.
All right.